So, Michael Curtis of Movement Bank, what is the difference between on-market loan programs and off-market loan programs?
Yes, that's a good question. So
Well, first of all,
yes,
you know why it's a good question? You know why it's a good question?
It is a good question.
You wrote it.
There you go. Yes. So the good question, I'll tell you right now, here's why it's a good question. All right. So not many people know about it. Right. So I feel like I have to evangelize what this is. And before I can answer that question, I got to answer another one. Okay. So there are two different types of lenders out there. Not good or bad. But there are two types. You've got wholesale lenders and you've got retail lenders. And both serve a very important purpose. Okay. So retail lenders, they work within the four walls of their institution. Okay. They are going to provide the offerings of their institution. And that's it. Okay. A wholesale lender is a mortgage broker. Many people have heard that term before. Yeah. So a wholesale lender works with multiple lenders, big box banks to small shops and everywhere in between. And so the wholesale lender has access to outside their four walls. Gosh, I had a hard time getting that out. The four walls of where they're employed. Okay.
Now, just to be clear.
Yes.
I've identified you as from Movement Bank.
Yes.
But you're not a retail lender?
That's correct. That's right. Okay. So I can offer what's inside of Movement Bank, and then I can offer what other lenders have as well that I'm partnered with. Okay. So that's the difference there. And so one thing that we can offer is off-market loan programs. Okay. So on-market would be everything affected by the market. Okay, you think about conventional loans. You think about what the Federal Reserve has been doing over the several months with interest rates. Well, that's all affected by on the market, and it serves a very important purpose, right? Off market is different. So off market is going to be more portfolio loan programs. If you're not familiar with that is, it's basically mid-sized banks or any bank for that matter that's offering a loan that they're going to keep on their balance sheet, that they're going to keep.
Yeah, and when you say keep, a lot of people don't know that a lender will often just sell that loan, usually to Wells Fargo. The funny story for me was I hate Wells Fargo, and I hate the big banks. And long story short, I refinanced with a guy like you, and immediately they sold it to guess who? Wells Fargo.
Went right back to Wells.
Yeah,
went down to the block.
I'm done with all that, paid off, and thank God.
Good.
So my question is that. On market versus off market portfolio, is that, am I understanding that right? That's money that the bank has on deposit. They're loaning their own money.
That's right. So they're basically just lending out their own money. And when you're in a volatile market, off market may have more of an appeal. Now, off market has always been around. Okay. So think of it like construction loans, land loans, lot loans. Well, in the environment that we've seen and experienced with a lot of volatility, what they've also been doing is offering standard mortgages, some of them as high as 100% financing, and then some with down payment requirements. What's great about these is that they're secured by themselves, right? So they're keeping this mortgage for themselves. That means there is no requirement for private mortgage insurance, which on-market programs would require.
Everybody hates MI, mortgage insurance, PMI. So you're saying if does Movement Bank have portfolio money to lend?
So either with us or with other lenders we work with, we do have options for both on market as well as off market. And again, I'm not mad at on market. It's a great space for people to be as well, but we have options for both.
But in other words, the normal guy like me would say, hey, give me that one without the PMI. What determines whether I'm going to have mortgage insurance or not?
So on market, that's where if you're putting less than 20% down, there's going to be private mortgage insurance. So think of your conventional loan program. Think about your Federal Housing Administration, FHA loan program. Those would have private mortgage insurance or mortgage insurance requirements around them. Off market, you're simply borrowing based upon the agreement between you and that bank. And that's it. And so they're not going to require any private mortgage insurance. You're simply going to meet their requirements, whether it be credit income.
Just to be clear, if I call you, and we're going to give you a number at the end of the podcast, if I call you and say, hey, Michael, be Superman to me. I don't want mortgage insurance. What's going to determine whether and let's say I've got, 5% down, normal, typical, and I say I don't want, PMI. How do you make that happen, or how do you determine if I can get that or not?
Right. So that goes kind of in hand with what we spoke about last week. So it's going to be through that pre-approval process. So in that last episode. So once we determine the financial vital signs and we see what options are available to you, that's where I'm going to start educating you as the buyer on here's what it looks like with on market, what options we have, and how private mortgage insurance may play a part in that. But here's options that are also available to you with off market. And we'll be able to compare and contrast what makes the most sense.
That's why they call you the advisor. Hey, guys, we're going to hit this subject next because I'm a real estate agent. Michael is basically a loan officer, originator. Is that okay to call you an originator?
Yeah, I'm a mortgage lender, a mortgage originator. Yes, sir.
Yeah, you're an originator because I see you got an original T-shirt on.
There you go.
With call to close CTC.
Yeah.
But next we're going to talk about, hey, you got under contract. Maybe one of my team helped you, hopefully. And, you always want to call me, subscribe, like, share, blah, blah, blah. But, and call me. Because it's my chat cast, I'll give you my number now, 704-345. Careful, Michael. 704-345-3400. We'll give you his at the end. But next we're going to talk about if you're under contract, how do you work with the lender and a realtor during that process? And that's coming up next.